Welcome back. Let's invite the management of CenturyPly, Keshav Bhajanka, the executive director of the company, is now with us to talk about how demand is looking right now. Mr. Bhajanka, thank you very much for joining in. This is typically a strong period for you, right? Post-Pujo, pre-Diwali. Could you give us a sense of how the volumes have been and even the price action compared to last year and even say pre-COVID? How would the numbers look?
I think, last quarter has been a good quarter, considering the high base that we had in the previous year. Q2 last year, there was a lot of pent-up demand, and as a result of that, we got a very good, we got good traction from the market. I think this year we have performed quite well, considering the market scenario. There was inflationary pressure, as you know, raw material prices were high. That led to price increases right across most product categories. But I think despite that, the demand scenario on the ground remains extremely buoyant, and we are expecting better growth towards H2 as well.
Okay. Could you give us some numbers? How much better compared to last year?
It'll be difficult to give numbers, but yes, it is definitely better than last year.
All right. Hi, Keshav. Good to hear that demand is solid on ground. Give us a couple of numbers then on the pricing front. I understand that, July was a bit of a subdued month on demand. We have raw material costs as well that have cooled off a little bit. So did you push through any price increases in the past quarter, or was it as flat as can be? That's point number one. And given that the second half of the year is likely to be good for the year, FY23, what kind of a growth are we looking at in comparison to FY22? I think we were flirting with mid-teens earlier, right, in terms of a top-line growth?
I think we are definitely looking at good growth for the current year. We were looking at 15% plus growth for the year, and I think we are more than on track for the same. We should, in fact, end up with a slightly higher growth. Having said that, I think that with regards to raw material inflation, last quarter, there wasn't any meaningful increase in prices that were taken. Raw material prices have cooled off to a certain extent. Perhaps timber prices have not cooled off as much, or as chemical prices have. But I think that going forward, we will not be in a position, we will not need to take further price increases. In fact, the margin profile should start improving as raw material prices cool.
Just on margins, so because of the unfavorable base, will margins across segments be higher? Can they be higher on a year-on-year basis?
I think, we have given a margin guidance, which is 13 to 15% for plywood, 14 to 16 for laminates, and 25% for MDF and particle board. And these are the long-term sustainable margins. Definitely, the attempt will always be to look at higher margins. But going forward, I think these are the margins that look possible in the long term. Over the course of the next 2 quarters, definitely the margin should be slightly higher as compared to earlier in the year, due to raw material prices cooling off slightly in plywood and laminates. MDF and particle board might still see some raw material price inflation due to the high price of timber, particularly in the north. But I think we are more than equipped through price increases to cover the same.
What would be the net decline in your raw material?
I think, in chemicals, there's likely to be a stark decline because prices had shot up drastically. So compared to, say, quarter 3 of last year, quarter 4 of last year, there could be a 30-35% reduction in the price of chemicals. But there has been an increase in the price of timber, particularly in the north, which is in excess of 10, 12, 15%. So that impact is likely to negate some of the benefits from the reduction in chemical prices.
12% price increase, that is in quarter 2 in comparison to quarter 1. I recall in quarter 1 it was up by 5%.
No, it is a gradual increase which has taken place over time.
Over 6 months?
Comparing it to last year. Yes, over 6 to 9 months.
Over 6 to 9 months, it's up by around 10 to around 12%. The street was as well was a little cautious. Why timber prices? There was a difference between North and South India as well. You're telling us that North India is the problem out there. Give us a greater sense on MDF then, Keshav. You have some capacity that's coming on stream. So how is the industry dynamics playing out here? Since that's going to be the growth driver, that's going to be the margin driver as well. What were the imports a few months ago? Are you seeing a resurgence in terms of imports? I want a sense on that business.
Well, I think it is one of the growth drivers to begin with. We are we are bullish on growth across segments, like I've mentioned before, whether it is plywood, whether it is laminates, whether it is particle board or MDF. But yes, it is likely to be one of the larger growth drivers. Imports have definitely gone up to a certain extent, because shipping costs have fallen. But while shipping costs have fallen internationally, the price of MDF has shot up. The price of MDF has increased by 15 to 20% in international markets, and that is helping the case for domestic manufacturers. In the north, we are not facing any challenges with regards to imports or any meaningful challenges with regards to imports. The new capacity that we are coming up with is in the north, and I think that going forward, that should not be a challenge at all. In the south, import pressure is likely to be there, and long term, this is something that we will have to contend with as an industry. But having said that, the demand is extremely buoyant. We are looking at 15, 20, 25% growth in the industry. So, when you have a 20% growth in the industry, there is always scope for both import and domestic players. So, we are not overly worried.
So, you're saying despite the increase in MDF imports, there is no oversupply which could put pressure on MDF prices which hurt your margins? Is that what you're saying?
Yes, there are two facets to it. Firstly, the demand growth being robust gives all of us a chance to increase our capacities and at the same time to be able to utilize those capacities. Other than that, the import prices, base prices, not taking into account freight, which may have fallen, compared to earlier, they have gone up. So both of these put together put us in a position where we are able to maintain margins, perhaps not as high as Q1, which you saw, that could have been an exception, but around the guidance that we have given of 25% plus, I'm sure we should be able to maintain the same.
All right, Keshav, in the personal capacity, the promoter entity has gone ahead and bought a large stake in Rushil Decor. Nothing more we should read into it, right, from a listed company perspective?
No.
Or is there a plan out there?
No, there's no plan. It just looked like a very good company at an attractive valuation. That's it.
But nothing from a listed company perspective? It's going to be a personal investment itself?
Yes, it is a personal investment.
Okay.
All right, Keshav, thanks very much. So next time you're on, questions will be on your business and Rushil's business as well. Thank you very much. Appreciate it. Well, that's CenturyPly. 55 points lower, so things are